And we're live. Hi all, thanks for joining us today for our 8th FinTech Sandbox Demo Day. I'm Kelly Fryer, Executive Director of FinTech Sandbox, and on behalf of my entire team, I'm excited to welcome you to today's event. We have 8 powerhouse startups and presenters for you today across a broad range of FinTech, really solving real-world financial gaps. Feel free to say hi and introduce yourself in our chat that you see there on the right-hand side of your screen. And you can also see profiles of each of today's startups in the Startup tab that you see there on the top. For those not familiar with FinTech Sandbox, we're a nonprofit that provides a leg up for FinTech entrepreneurs around the world by providing them with free access to critical data and resources in order to build their early stage products through our Data Access Residency. We're very proud to say that since 2014, we've worked with over 260 startups and built a global collaborative FinTech community. Demo Day is an opportunity for FinTech Sandbox to bring this community together and feature a few of the incredible startups that have come through our program recently, and to showcase the products they've built and grown with access to data from FinTech Sandbox's amazing 40 data partners. These folks provide data and infrastructure for free to some of the top fintechs in the ecosystem, as you'll see here today. Now, before we dive into the show, I want to say a very big thank you to our sponsors. As a nonprofit, we wouldn't be able to host events like this or support as many entrepreneurs as we do without them. For those in NYC this week, we hope you've been enjoying New York FinTech Week. It's been yet another incredible week of events this year, and hats off to John Zanoff and the team for another great year. FinTech Sandbox works with and supports entrepreneurs from all around the world. More than 25% of FinTech Sandbox startups are actually from outside of the US, and another 25% are based right here in New York City, which is one of the many reasons we love being a part of New York FinTech Week. And with that, I've truly been waiting all week for this. I'm excited to start FinTech Sandbox Demo Day with a fireside chat with the one and only Adrienne Harris. She's recently been appointed as the Superintendent of the New York Department of Financial Services, and she's going to talk with me today about the future of FinTech and share her take on areas such as digital currency, banking deserts, and so much more. So let's go ahead and bring on Adrienne. Hi, Adrienne. Welcome. Thanks so much for joining me today.
Hi, Kelly. Thanks so much for having me.
Well, I've been talking for the last few minutes here, so I'm kind of going to just dive us and turn it straight over to you. You have amazingly broad experience with innovative FinTech companies as an investor, a founder, a board member, advisor, regulator. You've really seen kind of all angles, which is so impressive. How did you originally find your way into FinTech in the first place?
Yeah, well, I have a long history in financial services. I like to say it's the only thing I know anything about. So I've been in government, in the private sector, on political campaigns. I started my career in big law at Sullivan and Cromwell here in New York before going to the Obama administration, first as a senior advisor to the Deputy Treasury Secretary, and then as a special assistant to the president in the White House as part of the National Economic Council, where I ran the financial services portfolio. And it was there that I stood up 2 working groups across the administration focused on FinTech. At the time, it was still sort of a new buzzword and concept. So we stood up an administration-wide working group on FinTech. We stood up another one on distributed ledger technology that was mostly national security based. And from there, I was really hooked in this space, and I thought it represented a lot of potential for modernization of financial services, for financial inclusion. So when I left the administration, I had spent all this time building policy, implementing financial services regulation. I decided I should do the thing, not just set policy for the thing. So I moved to Silicon Valley and helped start an insurtech company there with a few friends. That company then went public earlier in 2021. So I have a great appreciation for what startups go through in terms of building the company, in terms of dealing with regulators. And then I was privileged enough to be nominated by Governor Kathy Hochul to lead the Department of Financial Services and confirmed by the State Senate in January.
That's amazing. I feel like you've really gotten a chance to see perspectives from the startup to the White House, the legal side, now coming in as a regulator for New York. It's really, I think, helps to make a more robust perspective. So, I mean, now coming into this fairly new role as superintendent of the New York Department of Financial Services, how does this role fit into the overall financial and fintech ecosystem? And then what do you see kind of as your top priorities in your department for this year or even the greater future?
Yeah, DFS is really a global financial regulator. We regulate traditional banks, including the US branches of international banks, including 17 of the 30 GSIBs. We regulate insurance companies, including health, property, and life. We regulate money transmitters, check cashers, virtual currency companies, mortgage servicers, student loan servicers, and we're here in New York in the financial capital of the world. So we really are a global financial regulator. We have a vast remit, but broadly, my goal for the department is to build an equitable, transparent, and resilient financial system that benefits individuals and supports businesses. And when I think about my goals for the department, our priorities, really, I often talk about the 3 Ps, so our policy, process, and people. On policy, we're really working hard to establish a new norm and set the bar to say policy and regulation can protect consumers and make New York State the best place to do business. We really can accomplish both of those objectives together. And it means we have to lead through collaboration, lead through engagement. So as we're making policy, as we're writing regulations here, we're very focused on the data. We're very focused on engaging with all stakeholders, whether it be consumer advocates, legislators, other regulators, industry, and that's how we're going to make the best policy and accomplish our 2 objectives of protecting consumers and markets and making New York a great place to do business. Secondly, on process, all of the work that we do here has to be conducted with operational excellence, and that means that our decision-making is efficient, transparent, fair, surfaces all the data we need to make good decisions, and surfaces the best solutions for New Yorkers. So we're very, very focused on running a transparent and efficient process here, and everything we do being done with operational excellence. And then the 3rd P is really people. Neither the policy nor the process is possible without great people. And I'm very lucky to have a great team here at DFS. But we're really trying to shift the perception so that people understand DFS is an outcomes-oriented, innovative regulator with a culture of performance so that we can continue to attract the best talent to public service and to DFS in particular. And I have a personal goal that one day DFS will be in that magazine of the best places to work, and it'll be the only public service place that has the honor of being on that list. So that's a personal goal of mine.
I love that as a personal goal. That's amazing. It sounds like I would imagine your days are insanely busy. I didn't realize how vast the DFS's purview really is. That's just a few things there.
Just a couple of things.
Yeah. No, but so many of the things that you said between data, people, equitable, transparent sounds so much like the things that we at FinTech Sandbox talk a lot about. In fact, last fall, the theme for Boston FinTech Week presented by FinTech Sandbox was financial services for anyone, anytime, anywhere. And that's so important to us as a theme and a strategy and focus going forward. So I'm curious your perspective on what role regulation plays in ensuring that we're actually meeting the financial and banking needs of LMI communities and how that really informs your activities at DFS, and what steps really kind of regulators are taking to promote inclusion within the financial services industry and making sure that financial products themselves are welcoming and accessible to all consumers, which is, it should be a focus for so many fintechs now.
Yeah, absolutely. Well, I'm the first woman of color to lead DFS. And so for me, this issue is very personal. I try to bring my lived experience as a woman of color to work every day as we think about the decisions we have to make, as we think about the role of a regulator in financial inclusion, in developing safe and responsible innovation so that more people can be included in the financial system and have the financial health and well-being that they deserve. So first, we need to increase the representation of diverse individuals in the financial services industry. The industry really does need to mirror the diversity of the world that it's intended to serve. And with that increased representation in industry, we need to do a better job driving inclusion through new, innovative, safe, transparent, affordable financial products. And I think this is part of the promise of FinTech, and it's our role as a regulator to make sure as those products are developing, these new innovative products and services are developing, that they are safe and that they're affordable and that they're transparent. So they really are serving the needs of those who need them most.
Mm-hmm.
And when it comes to our work as regulators, it's really important that we're focused on how our policies, how our regulations impact everyday people. And that means re-examining the status quo and the way things have always been done here at DFS or with other regulators, and kicking the tires on everything we do to make sure that we are beginning and ending with New Yorkers in mind. So on diversity, we're in the process now of collecting industry-wide data on diversity. That means beyond just thinking about who the CEO is and thinking about who are the senior leadership in our regulated institutions, who's on the board, who's doing product development. So far, we know when we look at the C-suite, they're not terribly diverse, and most of the diversity is represented in the chief diversity officer slot. These roles are incredibly important, and I'm old enough to remember in financial services when those roles didn't even exist. But in addition to having diversity in the chief diversity officer slot or in the HR slot, it's incredibly important that we have diverse leaders with P&L responsibility. Those who are developing the products, those who are thinking about the bottom line of the institutions in which they work, those individuals have to be diverse in the broadest definition of the word as well. So that's something we're really pushing our regulated institutions to do, and something I talk with CEOs about all the time. Second, as I indicated earlier, there's a lot of hype around FinTech and financial inclusion. And while some progress has been made, there's still a lot of work to do. Solving access issues is hard. There's lots of complex challenges when we think about the digital divide, digital literacy, making sure these innovations are affordable and transparent. So we need to make sure that these developments and these innovations are happening with these underserved communities in mind, and that we are protecting them while also making sure that they can participate in the gains that these innovations have to offer. So you're going to see a lot more from me and from DFS around these issues.
I'm so excited to see what's to come. We, again, we talk a lot about not just the availability of these solutions, but the accessibility of these solutions and making sure that they're getting in the hands of people that need them and when they need them is so huge. And I love what you touched on about chief diversity officers and that representation throughout senior leadership. So you definitely see that trickle from financial services into FinTech as well, and who's starting businesses.
Absolutely. And I'll say too, just quickly, I mean, when we talk about innovation in financial services, it's about FinTech, it's about mobile technologies, it's about virtual currency, but innovation is also about how incumbent institutions evolve, and it's also about how we regulate. So for instance, I talked about questioning the status quo, really kicking the tires on the way this regulator has done things in the past. One example, when I came in, it came to my desk to approve an increase in check cashing fees here in New York. And I was examining the methodology, and historically, check cashing fees had been tied to CPI. The industry had become accustomed to a standard annual fee increase. For me, I came in, and again, bringing my lived experience as a woman of color, I said, I don't think this methodology makes sense. If we look at what CPI is doing with inflation now, of course, with the war between Russia and Ukraine, this is not a good way to think about the cost of check cashing. It's an incredibly important service for those who don't have bank accounts or don't regularly use their bank accounts. And this methodology is really going to hurt consumers in a terrible way. So we froze check cashing fees at their 2021 level. While we did the work of engaging with stakeholders, proposing a new regulation that'll come out soon that will propose a new methodology for how we price check cashing in New York. So I offer that just to say, innovation is not only about fintech, and it's not only about our phones and virtual currency and all the things that get so much attention, but it's also about revisiting the status quo and making sure that regulators are starting with the consumer in mind and taking an innovative mindset as we set about our work.
Absolutely. Challenging our own way of thinking sometimes.
Absolutely.
Well, another area kind of diving into this, I personally don't think we hear enough about banking deserts, which can occur both urban and rural areas and really leaves residents unable to access basic financial services. Plus, it leaves communities vulnerable to predatory lending, as you know, and expensive check cashing services. Have the banking development districts really been an effective countermeasure to combat this?
Yeah, and one of the amazing things about New York that I think goes underappreciated, because so much attention gets focused on New York City, but not only do we have New York City and a lot of the issues with banking deserts and the digital divide that come along in urban settings, but we have a lot of suburban and rural areas in New York as well, and they experience banking deserts in a different way than our urban populations do. So one of the exciting things about my role and the work we do here at DFS is we get to address these problems in all these different settings and think creatively about solutions. The Banking Development District program that you mentioned, which we call BDD, is one of those ways. And in fact, early in my tenure here, I approved a BDD in the Bronx that helped kept a branch slated for closure open. But as I was talking about re-examining the status quo, I have an alarm going off on my phone. We're actually in the process of re-examining our banking development district regulations and considering potential reforms to ensure that the program is as effective as it can be. And while BDDs are a piece of the puzzle, I do think we can't just continue to think about traditional banking services in traditionally underserved areas. We have to also think about new and innovative ways to fill these gaps. And that's one of the reasons I think fintech has such an important role to play.
Nice. Yeah, I think you're absolutely right. Everyone focuses so much on New York City, and the challenges are different when you look at urban living versus rural living, suburban. So it's great to hear how those are playing out in other areas of the state. You mentioned before about digital currencies, and I think this audience might kill me if I don't hit on that today. So they've obviously been an increasingly important topic, whether it's the recent executive orders on central bank digital currencies, the role of crypto playing in international conflicts, as you were just mentioning, or really just more broadly, the discussion around potential for more financial inclusion and access through these kinds of technologies. How is DFS approaching digital currencies, and what are kind of the key regulatory or technological dynamics and risks that fintech should be thinking about here in this space?
Yeah, absolutely. And I want to say I'm so glad that the federal government is really digging into this now. New York was actually the first US regulator, state or federal, to create a virtual currency regulatory regime in the BIT license. We also have limited purpose trust charters as well as money transmission licenses. So it's a regulatory regime that is quite rigorous, and I'll touch on that a little bit, but also offers flexibility for companies. But it really, because I'm a competitive person, it really irks me when people talk about the space being unregulated, because we've been regulating the space here in New York since 2015 and doing so quite rigorously. And that rigorous regulation has really attracted a lot of companies and innovators here to New York. In fact, last year, about 46% of investment in crypto writ large was made into crypto companies here in New York, about $41.1 billion. The imprimatur of a BIT license or a limited trust charter as given by DFS really is a mark of credibility for companies. It's good for their investors, it's good for their customers, it's good for entrepreneurs. And so we see the demand for BIT licenses, for limited purpose trust charters just growing and growing and growing, because the good actors in this space are people who want to be regulated, and they want that stamp of credibility from a regulator that's been at this for a long time and has a rigorous regulatory regime. But at the same time, we're doing a lot of work to modernize not just the application process, but our supervision of the area. So first, we're building out the team here, adding a lot of new talent. It's an area that's really been quite under-resourced. And that speaks to one of the legitimate complaints that I think the industry has, is that the process takes too long. So we are reviewing the process, rebuilding in terms of our human capital resources so the process can move faster and be more efficient without sacrificing the regulatory rigor that the space requires. We've brought in some wonderful talent from the private sector, some wonderful talent from other regulators, and that process is just going to become better and better over time. We're also looking at new technologies that will assist us with supervision and working closely with other states and with federal regulators. We recently acquired new blockchain analytics tools and engaged a number of service providers to strengthen our transaction monitoring capabilities. And this was something that was in the works anyway, but we accelerated our work around this because of the conflict in Russia and Ukraine, because we wanted to make sure we could hold our virtual currency companies accountable when it came to sanctions compliance and transaction monitoring. And additionally, the industry is going to hear a lot more from DFS soon on stablecoins, on DeFi, on NFTs, and other emerging technologies, both in the virtual currency space and otherwise. But here in New York, as I said, we have a long history of regulating this space. We have robust anti-money laundering and BSA requirements. We have robust cybersecurity requirements. DFS was also the first regulator to come out with cybersecurity regulations known as Part 500 several years ago. We're going to get ready to amend those regulations to keep up with cyber risks. So that'll happen this year. But we're doing a lot in the virtual currency space and looking forward to lending our expertise to the federal government as they begin their journey here.
That's really exciting. It's great to hear about not just the history of DFS and the work that you've already done in the space, but continuing to take a modern approach, continuing to add in new technology, new talent to stay current and continue to move the industry forward. So to close us out, I always love to end with future fintech forecasts when I talk to experts like you. We at FinTech Sandbox obviously see so many innovators and entrepreneurs looking to build new solutions. What areas do you think need even more attention over the next few years? And how do you see the role of fintech in the evolution of the financial services industry over the next, say 5 or so years?
Yeah, absolutely. It's a hard question to answer. I think undoubtedly AI is going to continue to be a huge part of what we see in fintech, in financial services, and the way that develops. And it's incumbent upon regulators to stay abreast of those developments to make sure that we're continuing to protect consumers and protect markets from some of the risks there without front-running innovation. I think there's going to be some really, really valuable innovation that comes out of AI, both for financial inclusion and for the way regulators do their job. So we're doing a lot of work here at DFS to implement data analytics and AI as a regulator to help us assess risks, to help us draw new insights about the market, about climate, about virtual currency. So that's a space I think is ripe for continued innovation and work by industry and regulators alike.
Yeah, it has so many, to your examples, has so many applications across a variety of areas. I think you're absolutely right there.
Yeah. We're excited. We're excited to see what the space brings.
I was going to say, now I'm just excited and jazzed up about the future, right?
Absolutely.
Well, amazing. I appreciate your time so much today, Adrienne, and for sharing your fintech insights with us.
Absolutely. Thanks so much for having me.
Okay, bye.
Bye.
Thanks again to Adrienne Harris for joining us today. Now, okay, are you ready? We have 8 demos in store for you. Each company will be briefly introduced by my team or one of our wonderful partners, and then we'll present for 5 minutes, including showcasing an actual demo of their product. While they're presenting, someone from each company will be on hand to answer typed Q&A, so feel free to add in questions via the Q&A tab on your right-hand panel. Just include who the company that you're asking the question to is, so that way we direct it to the right folks. There's also a poll tab that we'll use to track interest in each company. So if you'd like to follow up with or connect afterwards with a company, be sure to click the button in the poll each time. Now, our FinTech Sandbox team talks a lot about building a sustainable and inclusive financial future. It's so important to us. And one of the essential pillars to doing that is making the everyday accessible and digital, giving people real-time and around-the-clock access to the things they need for both day-to-day living, and day-to-day working. We all especially saw this challenge over the past 2 years with the pandemic. That's why we're thrilled to kick off Demo Day hitting on that exact topic.
Hi, everybody. I'm Sarah Lamont. I am an early stage investor at F Prime Capital and an advocate for FinTech Sandbox. And today I'm so excited to introduce Rentdrop and its co-founder and CEO, Remen Okoruwa. So Rentdrop is solving a problem that many of us know well, I think, as well evidenced by the fact that the market contains about $310 billion worth of rent payments collected each year. So what Rentdrop does is it helps self-managing landlords collect rent payments digitally with no transaction fees for either the renters or the landlords. So landlords love it because they get paid faster at no cost to them, and renters love it because they can pay rent digitally, not send in a check every month, and eventually can use their payment history to build their credit. So before launching Rentdrop, Remen and his co-founder Ben were both product managers at HubSpot. Ben scaled HubSpot CRM to be the most used CRM in the world, above Salesforce, in just 5 years. And Remen conceptualized and launched the highest rated reporting app at HubSpot while he was there. Together, the team is solving a problem that they know very well. They have been renting for over 20 years, and their CTO, Nick, has been on the other side as an actual landlord who has experienced those payment frustrations firsthand. So they have both sides of the coin on their team. And the company is growing very quickly. The monthly rent process has quadrupled in just the 2-month period between January and March of this year. So without further ado, please welcome Remen Okoruwa, co-founder and CEO of Rentdrop.
Hi, I'm Remen Okoruwa, CEO of Rentdrop. We're eliminating friction from $310 billion of rent payments for small landlords. Today's landlords have two bad choices for rent collection. First off, there's collecting rent checks. This is a terrible system that renters hate and landlords merely tolerate for all the obvious reasons listed here. Next, we have collecting with rent payment apps like Venmo. These simplify things for renters, but don't improve things for landlords who now have to deal with sending manual payment requests every month, individual renter payments that aren't aggregated by unit anymore, and multiple payments from the same renter due to low daily send limits. These apps aren't just digitizing a broken process, they're actively making it worse. And yet, these tools are used to process more than $100 billion of rent every single year. And landlords that switched to digital during the pandemic are desperate for a better solution. We hear from them all the time. That's because all this payment friction is driving $12 billion of preventable late rent every year, and nearly 3 days a year spent on payment collections. Time and money that matters to landlords. So we built Rentdrop to address these core payment issues, offering automation, high send limits, multiple payment options, and payment visibility that both landlords and renters crave. But we didn't just stop there. We're building a solution that doesn't just remove friction from existing rent payments, but changes renter motivations and makes them want to pay on time. How? By offering credit bureau reporting in a flexible sign-up process. Sounds pretty cool, right? Now, before I dive into the details of that, let me show you the app first. Now, here you can see a renter setting up recurring payment for himself and a roommate. Now, in this example, we're only going to add one roommate, but we're going to allow renters to add as many roommates or potential subletters as they want. And we're collecting the phone numbers so we can send out invitations and sign up via SMS. Once that's done, he can specify a rent amount and the payment timing details from the lease. Now, this step is key because it powers our auto payment system, which is going to make mailing rent checks as effortless as paying for Netflix every single month. And when it comes to the landlord, we're capturing email and phone in addition to the mailing address you would expect. And that's because every rent check we send is also going to be paired with digital notifications, providing a much more transparent payment experience than they would have otherwise. We want to be a payment app that both parties love, and this is how you do it. And with that, we click send invitations, and boom, first Rentdrop is created. Now let's return to credit bureau reporting. This is vital for addressing late rent because it makes on-time payments a renter priority, not just a landlord one. And it becomes magical when paired with our unique acquisition model. Our check mailing product allows renters forced to pay check to get a Venmo-style payment experience without landlord permission. And they're incentivized to do this because they'll be able to boost their score by paying with us. But we also have a fully digital payment solution for landlords. And this drives a really powerful viral loop where landlords bring on renters for Rentdrop digital payments. Those renters move and continue to pay with Rentdrop checks. And then their new landlords will eventually switch over to Rentdrop digital payments. And it goes on and on and on. So from an acquisition perspective, this year we're focusing our marketing on winning student renters right here in Boston. There's a lot of rent up for grabs here, and students are attracted to us because 1, they have multiple roommates, 2, high word of mouth, 3, significant turnover and new acquisition every year, and then 4, concentration in a few neighborhoods that we can target with focused marketing efforts. And the learnings we take from Boston can be applied across the country, where we see more than 200 million of ARR available with no meaningful competition. And since college students only represent less than 10% of renters in the US, there's a much bigger opportunity that awaits us still. Now, we've nearly doubled every month since the start of the year, and we're currently processing about 105,000 of rent. What's most exciting is that 3/4 of our landlords switched to us after previously using Venmo and Zelle. Houston, we found a problem. And on the business side, we're looking to earn more than $100 a year from renters through a mix of check mailing, credit bureau reporting, and credit card transaction fees. And we'll also allow landlords to pay for credit bureau reporting too, if they want. But we want to own all rent payments in the US, which means we're going after cash and money orders too. We'll be integrating into walk-in payment networks, allowing renters to drop off cash at nearby retail locations, and then landlords will see these payments tracked in-app alongside card or ACH. It's a massive win for landlords who finally get an app that will handle all of their rent collection, regardless of how a renter wants to pay. Mind blown. So here's what we need your help with. First, we're looking for strategics we can partner with to launch some of the payment features that are coming later this year. In addition, we're looking for connections within the real estate ecosystem to supercharge our product design and marketing efforts. So that's Rentdrop. We're on a mission to make rent payments effortless and rewarding for everyone involved. Thanks for the time.
Thanks, Remen. I didn't realize how many physical checks were still being used in rent payments until I met the Rentdrop team last year. It's mind-boggling. As a reminder, if you haven't already, be sure to check out the poll tab if you'd like to follow up with the Rentdrop team and learn more. We'll open a poll during each pitch if you'd like to connect afterwards with any or all of the companies. And you're welcome to ask questions in the Q&A tab too. Just note which company you're asking. Okay, next, as I'm sure we all know, sourcing, gathering, and updating information, whether it's internal or external, drains time, energy, and money. Infrastructure and tools that allow someone to do their job faster and smarter are essential to today's work. Our next 3 companies all focus on that from different angles, utilizing data and technology in order to build efficiencies and let your teams, whether they be investors, lenders, bankers, or IT, focus on their actual meaningful work. We'll see this showcase now across ESG metrics, commercial lending, and data integrations.
Hello, I'm Jim Smith with Blue Dun, and I'm a longtime advocate for FinTech Sandbox. Physis Investment reveals the impact of every investment to help institutional investors report expanded ESG metrics and build sophisticated portfolios. You've probably heard that the SEC has recently proposed new climate-related regulation that will require all publicly traded companies to report on emissions data and climate-related actions. These regulations will greatly increase the demand for the Physis platform, its data, and the expertise of the Physis team. I'm very excited about the work that Physis is doing, so I'm pleased to be able to introduce Stefania Di Bartolomeo, founder and CEO of Physis Investment. Stefania was one of Europe's first impact investing fund managers, and she understands the demand for sustainable reporting from the standpoint of a practitioner.
Welcome to Physis Investment. We help investors measure the impact of their investment on the planet. I am Stefania, CEO and founder. I started Physis because as a fund manager, I was tired of investing in companies that pollute. And I'm not alone. 86% of investors today want to invest respecting the planet. is such a big problem that the SEC and the European Union are enforcing new sustainable regulation. The SEC has created a task force to enhance climate disclosure, and they also have started examination review on sustainable portfolio. The European Union has made it mandatory by the end of the year for all sustainable portfolio to comply to two very strict frameworks, the PAI and the taxonomy. This is creating a lot of pressure on financial institutions. Wealth manager, asset manager, fund analysts, they all have a problem. They have to comply with the latest regulation, and they have to satisfy the new investor demand for sustainable product and proof of impact. This is exactly where Physis comes in. We deliver unique impact data where others cannot. Since the day of the first investment, you can measure robust data through the Physis platform, like the amount of water used or recycled by the company in your portfolio. At the heart of Physis is a combination of the latest technology and deep industry knowledge. We start by collecting over 56 million data points from company reports, company website. We assess data quality check for over 10,000 companies through our proprietary algorithms, and then we provide data calculation for over 355,000 funds. Our system is under patent. Let me show you how it works, because the hard work is all on our shoulders, but it is easy for our financial institutions to access sustainable information on the Physis platform. All they have to do is to type a security and deep dive into our robust and granular data. Impact data, for example, how much CO2 emission was generated since the day of the first investment, SOx, NOx, VOx emission, and of course, scope 1, scope 2, and scope 3 for the total portfolio and for all the company in the portfolio. Gender equity information, how many women were hired, how many women made it to management position, how many made it to executive position. This and many more information are available on the Physis platform. But the sustainability performance is also about the sustainability performance of companies, services, and products. Let's take, for example, Adidas. They've used over 40% of recycled material to create a specific hoodie. And they used 78% of plastic coming from the ocean for a specific pair of shoes. Physis is also financial data, thanks to Kiro distribution agreement, thanks to FinTech Sandbox. Physis is the one-stop shop for sustainable investors. One click to comply with the latest regulation. Easy to build an investment universe based on financial and sustainable criteria, and a robot advisor to build risk-efficient portfolios. And wait, there is more. Portfolio PDF report, portfolio share, and portfolio hub. What really set us apart? Well, data granularity that cannot be accessed on any other platform. A smart client interface that can be effortlessly integrated via API. And of course, we help our clients grow their clientele towards sustainable-minded investors. We launched last summer. We soon after started getting our first paying client, our second paying client, and now we just launched the platform with a group of 12,000 advisors. In the meantime, we also won numerous industry recognition, and yet is more to come for Physis. We're launching our new platform now, and we are going to open an office in Europe where we're experiencing an amazing organic growth. My ask for you today is to introduce us to more clients, asset management, wealth manager, pension funds that want to take their sustainable journey to the next level. Thank you.
Hi, I'm Mike McCluskey, Head of Partnerships at FinTech Sandbox. I'm happy to introduce Vero Technologies and their CEO and co-founder, John Mizzi. Vero has come up with a unique lending-as-a-service offering for banks and credit unions, and Vero's platform helps these financial institutions offer inventory financing to dealers of manufactured goods. Vero's commercial lending platform helps banks and credit unions offer a diversified set of credit products to small and medium-sized businesses without adding any new headcount or investing in new systems. Vero recently closed a $4 million seed round and has raised a $50 million credit facility. Given the price dislocation in today's auto market, dealers need Vero's solution more than ever. So with that, please welcome John Mizzi, the CEO and co-founder of Vero.
Good morning. My name is John Mizzi, and I'd like to introduce Vero Technologies and our lending as a service platform for inventory finance. Dealers of manufactured goods spend nearly $1 trillion a year on wholesale purchases, and nearly all of these dealers are using some type of inventory financing. Typically, a dealer will go to acquire inventory from a manufacturer, auction, or another wholesale channel and lean on their lending partner to advance the funding of wholesale purchases on the dealer's behalf. When the dealer sells the asset to an end customer, let's talk about auto dealers specifically here, they will then pay off the lender principal and interest from the proceeds of that sale. While this seems straightforward, think about a single dealer who's retailing hundreds, if not thousands, of vehicles every year. The lender has to take possession of titles, verify the condition of vehicles, which are the collateral on this type of structure, and ultimately monitor dealer operations to ensure compliance with their programs. If you're still wondering why banks are not offering or operating in this space, contemplate the challenges of underwriting SMBs on top of all the traditional credit products that a bank might offer today. We at Vero have built out a lending as a service platform that encompasses both an end-to-end technology solution that supports every step of the lending lifecycle, as well as a services offering where our in-house credit and collections operations can act as an extension of the bank's own commercial lending organization in order to administer the floor plan program in partnership with the bank. One important detail to remember with inventory financing is that you always have three stakeholders involved in any transaction: the supplier, the dealer who's your borrower, and a lender. We've built the first tri-party system that connects all three of those stakeholders to perform their respective responsibilities as it relates to making the wheel spin on inventory financing. We've had success to date with an emphasis on the borrower experience. We've not only built a portal for dealers to manage details around their inventory financing, but further have gone so far as to build a treasury management system purpose-built for dealers of manufactured goods, with pricing calculators, inventory analytics to help them make smarter purchasing decisions, and workflow automation that allows dealers to ultimately spend more time out on their sales floor rather than back in their office dealing with the administrative headaches that come with inventory financing traditionally. Finally, when dealers are, in order for a supplier or a dealer to floor a vehicle, naturally, it's a simple four-step process similar to an e-commerce checkout that you might be familiar with. Dealers enter acquisition details and provide the necessary documentation for funding, which is then handed off to our funding services team for review and approval as needed. Again, underwriting SMBs is challenging. Our team of underwriting experts with experience in inventory financing aggregate and pre-screen applications and then hand it off to our bank partners for decision. Finally, I'd like to show you what our servicing team relies upon as just part of their day to support the scaling of these programs with our bank partners. Funding requests are ultimately the highest volume of transaction activity that we need to manage. While certain types of requests are automatically approved, for those requests that do require human eyes, we've given all the data in one place for our funding services team to review and decision and send responses back to the dealer in order to move quickly and handle the high volume of transactional activities. We've been fortunate to move fast. After launching our lending operations 6 months post-incorporation, over the last 10 months, we funded more than $15 million in wholesale receivables on behalf of our dealers. We've evolved from our on-balance sheet lending, direct lending program towards our off-balance sheet lending as a service engagement model, following completion of participating in the ICBA's FinTech Accelerator program, where we were able to meet with more than 150 banks and build a pipeline of banking partners to onboard through the rest of 2022. We recently closed our seed round and are looking forward to kicking off our Series A in 23 after further validating the lending as a service engagement model. Our team of 11 encompasses banking, mobility technology, and inventory finance executives, which with a track record of successful exits and industry expertise. We're focusing on bringing transformational change to both dealer and banking populations. To date, we operate and support the needs of dealers in auto, marine, RV, and power sports vehicle dealerships, and look forward to continue to expand through bank partnerships to cover additional verticals like agricultural and construction equipment. We look forward to connecting with any investors who are interested in following our progress as we work towards our Series A. Thank you and have a great afternoon.
Hello, everyone. I'm Mohammed Dassinger, Head of FinTech and Health Tech Partnerships and Ecosystem Development at MassMutual, and I'm excited to introduce Zengines and their co-founder, Caitlyn Truong. Zengines focuses on one of the most time-consuming challenges in digital transformation, data conversion. When organizations migrate between enterprise applications, platforms, or services, Zengines automates the entire data conversion process. Founded in 2020, the Zengines team includes experts from financial services, data integration, and data science. And across their leadership team, they have founded more than a half dozen companies before. Caitlyn specifically joined Zengines from Accenture after she was a managing director in their North American financial services practice, overseeing digital transformation initiatives at the major financial services institutions. Zengines landed their first customer in 2021, and their 20-person team is growing rapidly. Please join me in welcoming Caitlyn Truong, co-founder of Zengines.
Hello, my name is Caitlyn, one of the founders of Zengines. At Zengines, our vision is frictionless data conversions, and we're here to solve a problem that has been unsolved for far too long. All organizations have these databases, applications, platforms, and those systems hold essential data. And if you've ever wanted to move that data, well, then I suspect you've run into the problem of data conversion. In other words, if your business is changing applications, undergoing transformation, integrating after an M&A event, you name it, your teams are entrenched in some systems migration that involves data conversion. And if you ask, what is the riskiest activity during the program? The answer is data conversion. Unfortunately, this pain has been in existence for as long as computers have been around. And worse, the best solution has been, well, humans. You can picture it, right? Occasionally, the data migration process would be missing. Frequently, there was a lack of tools and technology, and always the work was manual, running manual spreadsheets, manually writing SQL code, conducting manual reviews, and so on and so forth. And the work is painful, late, and expensive. Welcome Zengines, an entirely new way of converting data. What's different? 1, we're solving the problem with the latest AI advancements. 2, we're solving pieces of the puzzle that have never been solved before. And 3, we're solving the problem end to end. But rather than just tell you about it, let me show you. This demo shows a day in the life of a BA who's using Zengines in a conversion between two systems. And it includes actions such as review, approval, load, and test. We aim to make Zengines easy for everyone. Let's look at the system through the eyes of Chris, a business analyst. Chris logs in. All of the conversion artifacts, schemas, data, reference data were already uploaded via typical techniques. So Chris launches the wizard. Here, Chris sets the score threshold. Some users may set lower thresholds to see more source to target potential matches. Since Chris is comfortable with the AI, it's set to a high value to avoid displaying too many options. Chris runs the match. And here's one place that Zengines is different. Instead of waiting on a team of BAs to handcraft the mappings, Chris reviews what the algos have already automatically generated. We see the best score mapping between target and source. We see the targets tables and fields and which source data elements that are mapped. Chris can also click to see complex transformations and comments from the other team members. As Chris is part of a team who reviews and approves the proposed matches, he can leverage different productivity features. He can hide, show, or reorder the columns to change what's reviewed, or move the columns to make side-by-side comparisons easier. If Chris has questions about a specific field, say FX rates, there's a search with automatic filtering that brings that field or fields up. And if Chris is responsible for a specific data set, for example, the holdings, He can pivot the mappings to see just those. And finally, setting status is how Chris accepts or rejects the proposed match. Approvals and rejections, or not a match, are fed back to improve the algos. If Chris wants more information about a specific match or explore other candidates, we have the detail view, which provides AI explainability. In the detail view, he can see comments and the complex transformation requirements. And Chris can also dig into each option that the algo considered, see side-by-side information, and examine the relative scores. He can also use the screen to promote other options, further training the algos. Once Chris and the team are finished, Zengines automatically generates the mapping and transformation specification and builds the execution components. There's no need to write one-off SQL code or code up an ETL platform. This is completely different from today's process and is a huge time saver. Zengines, or the tool of your choice, executes the conversion by using the automatically generated execution components. The target application is now loaded with source data. Nearing completion of his tasks, Chris uses our tool to test and recon the data and verifies that the conversion meets business requirements. This is another area of difference for Zengines. Here, we're reconciling the differences between the target and source systems. We hope you saw how quickly and more easily data conversions can be conducted. While data conversion is Zengines' focused use case, there are other business relevant applications for our solution, including system selection. In other words, having better information such as data profiling upfront as part of the RFP or try before you buy process, and data governance, when it's important for your data management applications to be kept current and standardized immediately after a data change and in an automated way. Zengines' product is live with other pilots underway. We're excited to grow our partnerships with platform and service providers and consulting firms. We share our gratitude to FinTech Sandbox for making datasets accessible to us in our early days. We hope all of you will reach out to see how Zengines can show you an entirely new way of converting data. Thank you.
So far, we've seen digital payments, everyone's favorite topic, ESG, commercial lending, and an enterprise data play. So you're already really seeing the breadth of fintech that FinTech Sandbox supports and the variety of ways the data from our partners can be used. Now don't forget to keep using the polls and adding your questions to the Q&A for each company. In recent years, there's really been a spotlight on small and medium-sized businesses, the strains they're under, the support they need, the lack of infrastructure and digital solutions needed to keep many of them afloat during these hard times. Our next two companies both solve for financing challenges tailored to SMBs. One, looking at working capital specifically for the e-commerce space, and the other, post-payment microloans.
Hello, I'm Natalie Blaine, Senior Innovation Manager at Commonwealth. I'm happy to get to introduce Paperstack and their CEO and co-founder, Assel Beglinova. Paperstack provides e-commerce sellers with working capital by offering microloans and financial insights to help them grow their stores. Between Assel and her co-founder, Vadim, they have a combined 12 years of experience across finance, technology, and lending. Paperstack has already reached over $6 million in customer commitments, and their loan book has yielded 18% APR equivalent with a 0% default rate. Quite impressive. Their mission is to support 1 million e-commerce sellers globally, and they've received backing from Techstars, along with executives at Wealthsimple, TD Bank, Clearco, Shopify, Google, Apple, and more to reach those 1 million sellers. Please welcome Assel Beglinova, CEO and co-founder of Paperstack. Thank you.
Hello, my name is Assel Beglinova, and I'm a co-founder and CEO at Paperstack, a platform that provides e-commerce sellers with working capital to help them purchase inventory, invest in advertising, and hire more talent. It's not a secret that e-commerce has exploded in the last 2 years. There are over 40 million online merchants around the world selling direct to consumer on platforms like Shopify, Amazon, Etsy, and WooCommerce. And many of those e-commerce sellers have challenges accessing affordable working capital to finance their day-to-day operations. Current solutions that are available on the market are just too expensive, restrictive, or inflexible to appeal to the majority of e-commerce sellers. In fact, 76 of online merchants who make less than $150,000 are being overlooked by both traditional financial institutions and fintech lenders, which presents us a massive business opportunity. This is where Paperstack comes in. We provide with subscription capital and financial insights to help merchants grow their store. We have developed an underwriting technology that integrates directly into our customers' financial data, evaluates the risk, and assigns interest rate in real time based on their ability to repay working capital. And because of that, we're able to make a decision in 24 hours while significantly reducing our risk of default. And let me show you how it works. At Paperstack, we're able to provide you capital to e-commerce sellers within 24 hours. We can do this by getting access to their financial information, such as revenue and expenses. First, we ask our users to connect their Shopify accounts to understand their sales. The more money they make, the more money we can offer. Then we connect to our customer's bank account to evaluate their profits and expenses. Let's take a look at the dashboard that our clients use to manage their finances. At the top of the dashboard, clients can see the amount of capital they can access at any given moment, as well as any fees and repayment schedule associated with this. Below, we'll help our customers visualize their cash flow, track important e-commerce metrics, and break down expenses by category. What sets us apart even further is our ability to provide financial insights that can help online merchants find ways to grow revenue, optimize profitability, and improve their cash flows. The future of e-commerce is omnichannel, and our customers can connect as many merchant accounts as they need, bringing together sales from Shopify, Amazon, WooCommerce, and Etsy. And so far, it's been working. We received incredible support by both Google Accelerator and Techstars. And while at Google, we have developed our proprietary underwriting technology side by side with Google's most talented engineers. We went on and closed our pre-seed round of funding. And after joining Techstars, we leveraged their global network to establish a series of key partnerships. Most importantly, we have over 65 e-commerce brands who sign up on our waitlist, looking to borrow up to $5 million in working capital. Since launching our beta in early February, we managed to allocate just a shy of $50,000 in microloans, generating an annualized rate of return of 18%. And I'm excited to share that we have 0% default on our loan book as of today. Many of our customers who work with us to access capital, they need to launch a new product line, reach more customers, or expand their operations. Since launching Paperstack, we've touched the lives of hundreds of online sellers. But don't take my word for it. Just look at what we managed to accomplish with our customers in such a short period of time. It's a success stories like that that make every day working at Paperstack worth it. We received investments and strategic support from the top executives at companies like TD Bank, Clearbank, Wealthsimple, Assel, and Coho, as well as employees at Shopify, Apple, and Google, who bring decades of relevant experience to the table. And we're proud to be working with distribution partners like Venture for America, WeFounder, and OnDeck, all of them who help us reach more customers. Last year, Techstars became our first institutional investor, putting their stamp of approval and facilitating introduction to thousands of potential investors. Our partner Google just published an official case study highlighting our grand mission to empower 1 million e-commerce sellers globally. And last but not least, we want to say a big thank you to FinTech Sandbox, whose data partners enable us to make better decisions in underwriting and risk management process. And that is the foundation of our very own business. But we're not stopping here. Our mission is to support merchants around the world with financial tools and resources they need to grow beyond just revenue-based financing we offer today. The trade finance itself presents a multi-trillion-dollar opportunity and has been barely scratched by current fintech players. It's a high time to be building a fintech venture in the e-commerce space, and I welcome you to come on board. Thank you so much.
Hi, I'm Emily O'Connor, Operations Director at FinTech Sandbox. I'm so happy to introduce our next startup, PunchPay, and their CEO and co-founder, Michael Lee. PunchPay offers small businesses post-payment micro installment loans, creating a new financing mechanism for SMBs to access working capital after money has been spent. PunchPay provides a solution to the deeply underserved market of over 20 million small businesses that struggle to access working capital consistently and are too often left with the only option being predatory high-interest loans. Their team brings unique perspective to the small business lending space, having been small business owners themselves, in addition to their significant accounting experience. Please welcome Michael Lee, CEO and co-founder of PunchPay.
Hi, my name is Michael Lee. I am CEO and co-founder of PunchPay. PunchPay is helping small businesses access working capital through microloans on paid expenses. Access to capital is a constant struggle for over 20 million startups and small businesses in the US. Only a tiny percentage of small businesses raise venture capital, and the rest rely on personal credit when running their businesses. Or a few may have already existing banking relationships, but banks haven't caught up to the type of expenses that most small businesses now spend on today. There are many types of expenses that an entrepreneur cannot currently finance, such as consulting fees, website builds, annual software license agreements, key person life insurance, and many other non-physical purchases over $1,000. These types of expenses are often needed to move a business forward, but when the money is spent, usually doesn't align with the time it takes to see return on those expenses. This problem of small business capital access has also been heavily impacted by the changing purchasing behavior from using buy now, pay later installment products. Many consumers are also small business owners, yet there are not many options for installment loans in the small business space. Installment loans are a new norm, but not yet a common practice in small business spending. This is where PunchPay comes in. PunchPay has created a new way to finance your small business capital needs. By leveraging data in your small business accounting system, PunchPay offers you a line of credit to convert your paid small business expenses into microloans. For example, imagine needing to update your website with a web developer, knowing that updating the website will increase your sales. Unfortunately, there's currently not an easy way to finance an expenditure like website development. But with PunchPay, you can finance this type of expense easily by paying the web developer and then coming to PunchPay to finance it through your accounting system. This gives you back the working capital you need and extends your payments terms to align with when you're going to see revenue on that investment. By guiding the user to choose specific expenses to finance, we are training them on the types of expenses to finance and providing analytics for cash flow management, getting your cash the next day so that you can use that working capital back for the growth of your business. We are also helping users manage their cash better by aligning their debt usage with its specific expenses. Let me show you how it works. PunchPay immediately makes a line of credit available for a user once they connect their accounting system. Once in the platform, you will see that PunchPay has analyzed the accounting data, approved your front line of credit, and immediately downloads all of your expenses. The line of credit can be applied to any small business expense, and we show you the number of active loans you have with us. You decide on the expense you want to finance, click on Finance Now, and select the number of months you would like to pay back between 3, 6, or 9 months. We make it very clear on the payment terms, how much you borrowed, when you'll pay it, and when it'll hit your bank account, and what the total fee is. You select the bank account you want your funds deposited into. Voila, you have a PunchPay installment loan. PunchPay has made it very easy to manage the active loans you have with us, letting you easily see and manage these loans for cash flow purposes, and also see the upcoming payments due, as well as any history on the loans you have with PunchPay. PunchPay lets you stack multiple loans with us as long as it doesn't go past the line of credit you've been approved on. It's that simple with PunchPay. Our journey began the past 2 years where we raised our initial funding round, launched our core accounting API, and joined the FinTech Sandbox. We worked closely with accountants as part of the CPA.com accelerator to better understand the large amount of accounting data we were receiving. We also got accepted into Mucker Lab, worked with banks to understand how they underwrite small business loans. Our participation in FinTech Sandbox also allowed us access to small business data to inform our analytics engine for small business underwriting. For 2022, using our knowledge of accounting data and loan underwriting, we now offer micro installment loans directly to small businesses. We're raising our next round and getting to 1,000 loans as fast as possible. After this year, we plan to launch a full suite of financial service products, such as a PunchPay credit card, small business checking account, and an SMB marketplace for additional small business products inside our platform. Because of our history working with accountants and wanting to rely on accurate accounting data, we launched PunchPay through our accounting network, accessing millions of small businesses that are on the QuickBooks Online platform. Small business customers who use accountants understand the value of their financial record keeping and have a stronger chance to qualify for financing in PunchPay. This is our QR code for any of you interested in becoming an early user. We look forward to connecting and getting your feedback. My co-founder Ali and I are both in person at the conference, so would love to connect with any of you in person. Thank you.
Thanks, Assel and Michael. Great to see how two companies are tackling similar challenges in such different ways. And that brings us to our final two presentations. As we live in an increasingly digital and online world, we're all trying to combat new risks and build more trust and more trustworthy products to protect our digital footprint. It's an ambitious and ever-evolving problem to tackle, especially in today's life. You'll see that in two very real-world and topical solutions, one in digital identity and the other in crypto threats. Enjoy our last two demos.
Hi, I'm Margaret King, VP of FinTech Partnerships and Strategic Investments at Franklin Templeton. I'm proud to introduce Unum ID and the co-founders Liam and Aidan McCarty. Unum ID enables the next big card business for card issuers and one-click identity verification for related parties. The company was founded by two brothers, Liam and Aidan, alumni of Stanford University, and recently named Forbes 30 Under 30 for their work with Unum. Unum ID is working with one of the top banking as a service companies and one of the top identity verification companies in the US. The team just closed a new round led by Tim Draper and 1414 Ventures. Franklin Templeton is also an early investor. So really gaining a lot of traction and interest in this area. Please welcome Liam McCarty of Unum ID.
My name's Liam McCarty, and we are Unum ID, the ID card network. Unum ID is the next big card business, which begs the question, what was the first big card business? And that was credit cards. In the 1950s, the average American consumer had a dozen or more forms of credit, charge coins, charge plates, and so on for Mobil Oil, Sears, and other merchants. In 1958, Bank of America introduced the very first general-purpose credit card, which let the consumer use one plastic rectangle to buy something wherever they went. Bank Card revolutionized commerce and would later become Visa, one of the most profitable companies in the world. And to this day, credit cards are the most valuable part of retail banking. In 2022, we have an analogous situation, not in payments, but in identity. The average consumer has hundreds of different digital identities, one for every service they interact with. But we have introduced the digital ID card, the digital equivalent of the plastic card. This allows the consumer to prove who they are instantly wherever they go online. Let me show you of what this looks like in action. I will use a Wells Fargo ID card to sign up for Acorns with one click, sharing my verified data instantly. First, I open the Wells Fargo mobile app. I can sign in using whatever account system that they have, and you'll see that I have offers inside of the app. These are just like cashback offers, but in this case, they're for instant sign up. For example, here's one for Acorns. I can click Continue with one click, which opens the Unum ID web wallet inside of the app. I unlock it with a biometric, and Wells Fargo dynamically issues me a digital ID card. I can see exactly which data is being requested, that Acorns is the one requesting it, and I can choose which information I want to share. Say I want to use a personal email instead of a work email. I can do that. Say I don't want to share my phone number because I'm not comfortable doing that. I can uncheck that. And at the end, I give explicit consent and click Share Data. That sends a packet of information over to Acorns, who can cryptographically verify that it's accurate, that it really came from Wells Fargo. They then use that data to create an account for me. It's that fast. This is the ID card network in practice. The issuer, in this case Wells Fargo, but in general any company with verified data about who a user is, issues the user a digital ID card stored on their mobile phone. The user then presents that ID card to a relying party, in this case Acorns, and in general any company that needs verified data about the user. And then the relying party pays for access to the data. That money goes to the issuer of the card and to Unum ID as the network provider. The upshot is we unlock access. Now, why would you become a relying party? Well, the reason is that legacy onboarding without Unum ID is a terrible experience and very expensive. It on average takes 29 clicks, 16 fields, and 6 minutes for a fintech to onboard a new user, with 12 hours for full approval and over a quarter of users not completing the process at all. With Unum ID, this is instant onboarding. 1 click, 0 fields, less than 10 seconds, instant full approval, and 99% completion rate. This is Acorn's actual onboarding flow today. These are screenshots from the app. And this is how much better it can be with Unum ID. We already have almost 100 companies on our waitlist to be relying parties. Companies in fintech, crypto, e-commerce, shared economy, and more. The demand is there. Why would you become an issuer? Well, as a financial institution, you want your brand front and center, and this allows you to do so. Issuing an Unum ID card makes you essential to users' online lives, making you top of wallet and top of mind. And you enable amazing experiences that users will love. There's also an enormous revenue opportunity. Here's some back of the envelope math. Say you have 10 million users, you charge $1 per transaction, and the user uses their digital ID card once a month. That's $120 million in net new revenue opportunity at almost zero marginal cost. We're not the only ones who see this opportunity. McKinsey, for example, estimates that digital ID will unlock 3 to 13% of GDP by 2030. We are proud to be working with FinTech Sandbox and data providers like Plaid and Equifax, and we are backed by some amazing investors. And we just closed a bunch of new funding. So come work with us. You can be an issuer to become a top-of-wallet brand and earn huge new revenue. You can be a relying party to enable one-click onboarding with 100% conversion. Or you can be an investor to have ownership in the network that's Visa for identity. Thank you for your time.
Hi, I'm Rachel Friedgood, a financial services partner and Metro New York fintech leader at Ernst & Young. I'm excited to introduce Merkle Science and their founding team member and director of partnerships, Ian Lee. Merkle Science provides next-generation crypto threat detection, risk management, and compliance for businesses, banks, and government agencies. Their predictive crypto risk and intelligence platform is the next generation of crypto threat detection, risk mitigation, and compliance. Today, Ian will showcase how Merkle Science technology is empowering digital asset businesses, banks, insurers, and government agencies around the world to transact and interact with crypto safely. Merkle Science envisions a world powered by crypto and is creating the infrastructure to enable the industry's safe and healthy growth. Please welcome Ian Lee, founding team member and director of partnerships of Merkle Science.
Good morning, everyone. Thank you for giving us this opportunity to present. My name is Ian, and I am part of the founding team at Merkle Science. Merkle Science is a next-generation cryptocurrency risk monitoring platform that aims to detect, investigate, and prevent the illegal use of cryptocurrencies. As many of you are aware, in recent years, blockchain and cryptocurrency has been gaining in popularity. Just last year, more than $30 billion was invested into the space as more and more financial institutions seek to embrace this new opportunity. Unfortunately, as the legitimate use cases rise, so has its illegal use. In 2021 alone, it was estimated that more than $14 billion worth of cryptocurrencies was involved in illicit transactions. This puts many legitimate crypto businesses at risk, as they could be a target for criminals seeking to launder their illicit gains. Unsurprisingly, governments around the world have introduced new laws and regulations that seek to deter and identify such illicit activity. Crypto businesses who fail to meet the regulatory standards are then slapped with large fines and sanctions. Under these new regulatory standards, there is a need for new age solutions to detect these new risks, and this is where Merkle Science comes in. We have developed a suite of different solutions designed to make use of the blockchain's transparent and traceable nature in order to help crypto businesses and financial institutions comply with the law, while simultaneously assisting law enforcement and regulators with investigations and surveillance. Our first solution is Compass. Compass is a blockchain wallet and transaction monitoring system designed to detect for potential money laundering risks by identifying source of funds and suspicious transaction behavior. Compass leverages on Merkle Science proprietary behavior rule engine to go beyond the blacklist and allow for compliance teams to create customizable alerts to detect a range of different risks in order to meet their AML compliance obligations. The Merkle Science Compass solution allows for organizations to monitor in real time where the funds that they are receiving are coming from sanctioned entities, darknet marketplaces, or other illicit sources. Using Compass, users can quickly analyze the risk of flagged accounts in order to determine who controls it, what type of organization it belongs to, who these accounts' counterparties are, including the name of the counterparties and entity types. As well as leveraging on our auto-investigate function, we can also visualize all the transaction flows originating from said account in order to better detect for money laundering risk. As you can see in the tool, users can immediately trace through multiple accounts in order to identify where the ultimate source of funds came from, in this case, darknet marketplaces and exchanges. All of this is, of course, powered by our risk policy, which is built on a proprietary rule engine. Our rule engine is unique as it is able to go beyond the blacklist to detect not just source of funds, but suspicious transaction behavior as well, which may also indicate for potential money laundering risk. With a focus on ease of use and customizability, users of our platforms can easily modify existing rules or create their own rules designed to match their business needs and based on the jurisdictions they operate in. By leveraging on our Compass solution, crypto businesses are able to automate their monitoring, thereby reducing compliance costs and enabling them to scale more efficiently. Now, aside from Compass, we've also built a system called Tracker, which is a forensic tool used by law enforcement, cybersecurity firms, and FIUs to investigate criminal use of cryptocurrencies. Using Tracker, users can trace and visualize in real time how these criminals are laundering their funds in order to gain actionable intel which can be used to identify them. And finally, we have Explorer, a new age enterprise solution designed to help financial institutions monitor the risk of their crypto counterparts, thereby allowing them to work with crypto businesses in a safe and compliant manner. Backed by leading venture capital firms around the world, we enable businesses to scale and mature so that a range of full individuals, entities, and services may transact with cryptocurrencies safely. Merkle Science envisions a world powered by crypto, and through our innovative solutions, we are creating the infrastructure necessary to ensure the safe and healthy growth of the cryptocurrency industry. If you find what we do interesting, please reach out and we will love to talk to you. Thank you.
Wow. Did those leave you wanting to go solve the world's financial problems? We hope it inspired you to build or fund even more fintech solutions for us all. Another congratulations and huge round of applause to the 8 incredible companies you saw present today and the powerful products they've built so far. If you're a fintech entrepreneur like these folks looking for data access, submit an application to FinTech Sandbox's Data Access Residency. We accept companies on a rolling basis and are always admitting new residents to our program. Before we hop off, I need to spend a moment recognizing our small but very mighty team behind the scenes who has made this happen. A group of such hardworking, passionate, talented folks that I appreciate working with every single day. So I want to say a massive thank you to our FinTech Sandbox team. Also, thank you to our FinTech Sandbox sponsors for generously supporting our entrepreneurs, our organization, and this event. And thank you to our data partners and community partners for fueling fintech products and helping us push innovation forward. Finally, please mark your calendars for September 27th to 29th, Boston FinTech Week presented by FinTech Sandbox. We'll be back again in person, and we can't wait to host our 5th Boston FinTech Week this year. Thank you all again for joining us today, and go FinTech.